And look at that. We are live. Merry Christmas, everybody. Spencer Israel, Jason Purse, Sam Gatlin, in that order on your screens, left to right. I guess this is becoming a tradition now where we go live on the holidays. So just shoot the shit and talk about markets and whatever's on our minds and share some charts. So, guys, Merry Christmas to you both. Hope your day's off to a good start. How was your Christmas Eve night into Christmas morning?
Spencer, I drank too much. I'm still kind of hungover. To be honest with
you,
too
much eggnog.
Yeah, no, it's a great day. I always get excited about the basketball on Christmas Day. Some of the best games of the entire season are on Christmas Day. You have the OKC Thunder taking on the Spurs. The Spurs have had their number here recently. The only team in the NBA that can beat them. So
that's right.
I'm hoping that the Thunder can show up today and stick it to the Spurs. I'll be watching it. It starts at 2:30 p.m. Eastern time. Don't miss it.
Okay. What do you do with Wemby, man? What do you do with them? That's the question.
And it's not just a Wemby problem, Jason. Like, their guards are amazing. They're a very young team. They're a lot like the Thunder. You know, they're super long. They can all shoot the ball. They pass it really well. Amazing defense. I'm looking forward to the next decade where it's just a continued rivalry between the Spurs and the Thunder.
I think that'll happen too. I'm excited. Castle's such a good player. You know, like you got Castle. He learned from Chris Paul last year. Like he looks like he's setting up the offense amazingly. He's a great defender. So not to mention they're surrounded by shooters. Everybody on the team besides, I mean, Castle's not the best shooter. Wemby's a good shooter, but also then you got everybody else can basically shoot who's in the lineup. Like, it's an amazing team. It's fun to watch. OKC, though.
All right. Enough about the basketball.
I don't know, man.
Let's get to the commodities. Let's get to the charts. What is on your guys' Christmas wish list? I want to ask for commodities markets.
Well, let's bring the deck up, Spencer. Yeah. Let's bring the deck. Start with step one. And you guys, I'm like of course, I get back on Christmas morning and I start to set up all my stuff and everything's a little funky. So if you guys are having trouble hearing me, just write it in the chat. But so like first off here, we're looking at the 1933 gold seizure. This was the FDR gold seizure back in 1933 where he did this by executive order. A lot of people kind of forget about this, but I kind of want to lay a couple things out here for people. So you have the 1933 gold seizure. Basically, this is around the time of the Great Depression. We just had the crash of 1929. We don't know how to restart the economy. And basically, this is an idea. A lot of people think this is for a lot of reasons. There's a lot of conspiracies around it. One of my biggest thoughts on it is it's really to inflate the currency. You really couldn't inflate the currency as it was so pegged to gold. By getting gold bullion back, you could basically now start to reflate the currency. So hit the next chart, Spencer. So now we're looking at the inflation rate. So what happened around 1932, 1933? Well, the gold seizure happened. So next thing you know, we had this big move higher. So we had this big move higher that just continued to happen in the inflation rate, basically because now we could debase the currency. When I'm always talking about a bull steepening environment, and I'm talking about that scenario happening, I'm talking about the idea of the dollar going down. So, you know, this is an idea that just kind of started around this time. We really didn't have any inflation in the United States from, want to say, basically, I think they kept records from like 1690 all the way to, I want to say, 1933. So we start to get a little bit of inflation. World War I has some inflation. World War II obviously has more inflation. And then move forward to the next chart.
Well, I didn't realize, Jason, that we had minus 10% deflation. That's terrifying.
Yeah, Jason, like, how do you know this policy you were talking about was like, that was the cause for the inflation? You know, you just had the 1929 panic. You know, it was an extreme.
That was deflation.
Like, this could just be the snapback from it.
No, it's not. So we didn't snap back at all. That's the interesting thing about the Depression. If you read any book on the Great Depression, whether it's Murray Rothbard has a great book, Milton Friedman, there's a bunch of them on the Great Depression, and they would all talked about this part of it happening. And not to mention, we kind of had like a very deflationary shock. So, we're the snapback 1929, we crashed very hard. We continued to stay down there. We didn't really get off of those lows for many years, but this inflation, the little bit of inflation they caused, really made gold miners were actually a really good trade at that time. That was basically the only thing you could trade that made a lot of money during the 30s. And a lot of the reason why is that the dollar continued to move lower. But at the same time, they're saying it's pegged to gold at that moment. So a lot of people don't know the exact reason why the dollar is losing value, why inflation rates are kind of moving back up from that bottom period. So hit the next chart, Spencer. So now we get to 1971. So this is the big one. So 33, yeah, that's something that happened. It's the first time we kind of tried that idea. Go all the way to 1971. Basically, we had France was basically like, hey, we're going to need to get our gold instead of dollars. And we were like, yeah, we really don't have that much gold. Sorry, guys. We didn't say that, but that was actually the truth. So it kind of went back and forth because they're sitting there looking at all these dollars and going like, there can't be this much gold in their vaults. And they finally asked for the gold back. And then we suspend the convertibility of dollars into gold. It was supposedly against the speculators is what Nixon said, but really it was basically
the government always blames it on the speculators, Jason. We've seen
always
this time and time again in history. Speculators are evil. They're so greedy. They're here to ruin the government.
It's always us. And I see the comment like they could just seize your gold. Yes, that was a thing that actually happened. Do I think it's probably going to happen today? I really would be surprised. But once again, you never know what the exact scenario could be. So hit the next chart, Spencer.
Whoa.
So now we're looking at the inflationary cycle. So if we look at, there was a little bit of inflation coming out of the Great Depression. Obviously, we talked about the 1933 gold seizure, and not to mention just coming out of the Great Depression is going to be inflationary in some sense. So we did see some inflation. This would end around stage one, which really kind of only wrapped up all the way into the 60s. Then we get 1971. 1971, Nixon. We have what we call the Nixon shock. If you go online and look up the Nixon shock, you will find this. So Nixon, basically, there's a whole video of him and exactly what he said. And I just kind of summarized it, but feel free to look into it. But this also created like the first wave of inflation, or the second wave of inflation, according to this chart. That was a big move that looked very similar to 2020. As you can see, 2015 to today is the chart. The big spike is 2020.
Didn't gold bottom in 2015, Jason?
Yes. So gold bottom rate in
2015.
Yeah. Yep. So gold bottom rate in 2015. Also very, very relevant to this backwards looking data that we're seeing at the moment. But really, it's like just an idea of, hey, we're kind of at a very similar scenario that we were back then. And the next chart is Sam's perfect at everything. So I'm sure that Sam got it. So I asked Sam to add this chart today, and I was like, yeah, Sam add it. And I was like, I didn't tell him where to add it, but Sam knows where to put everything. So here we go. So we're looking at the gold reserves now compared to U.S. Treasury holdings. And for the first time in history in 2025, not the first time in history, the first time since I think it was 95, we're getting up to those levels now again where people globally, central banks are holding more gold than they're holding U.S. Treasuries. We're also getting to that point almost now where they're holding more gold than they're holding U.S. dollars. So altogether, it's kind of seeing this exodus out of dollars or treasuries and into things like gold. So this is an interesting time, and why I'm bringing up these parallels is like this move in gold is unheard of, and most people are looking at it going, okay, gold miners up 180%. This is insane. This can't continue. And the answer, I think, is like we're kind of in this different cycle right now. In the 30s, gold miners were the winners. In the 70s, gold miners were absolutely the winners. Gold, silver went crazy. Silver making one of the biggest moves in history. Now today, we're kind of in a very similar scenario where we had gold. I think 2020, the bottom for silver. The bottom for silver in 2020 was what, $10, and so now we're all the way up to 70. So we're at a very interesting time in this cycle where I think we could continue to see a big move in gold, silver, and the gold miners. And we're going to start moving into these other commodity-based sectors. But, just want to give everybody a little bit of that, because for 2026, everybody's asking, like, what do you think is gold? Do you think this is done here? I don't really think it's done. I think this is.
I wanted to ask you, like, yeah, this looks like a massive base to me. You know, like we talk about bearish to bullish reversal patterns all the time, and look at where this golden line came from. You know, it used to be at 75%. It's still at 30%. So, like, do you think we're going back to 75%?
I wouldn't doubt it, because I think the thing is that, like, over time, countries understand, like, the gold is money, right? So this is the hardest thing to really grasp. Now, people will be like, it's rocks, it's this, it's that. It's money. Everything is subjective. It's money because people have always thought of it as money. And in times of exodus, where people are starting to move into different areas for their portfolios, different monetary policy, and so on, and things get a little bit frothy, people always tend to run back to gold. And I think it's kind of the scenario today. I'm not saying like we're gonna all like be trading gold for food or anything. I'm not one of those, but I am saying that there's a scenario here where central banks know that gold is safe, gold is money, and moving away from treasuries, moving away from dollars kind of keeps them safe. And so they're doing it to quite a crazy level today that we haven't seen in a long time. And it reminds me of these periods that we've seen before, which is 33 and 1971. So I think this is going to continue. So I think into 2026, my big thought here is that this is going to continue. I think people should have gold, copper miners, whatever, any type of mining stock on their radar still. And I think this is going to make a lot of money.
Sam, any reaction?
No, I agree with everything Jason is saying. This is all.
Oh, there's got to be
totally
something you disagree with.
No, no. I wish I could disagree, Spencer. I think if you could go to the next slide, it really speaks to this paradigm shift we're seeing in precious metals. I believe that's the long-term gold chart. I wanted to talk about the next one, but I'll start with this. Like, you know, it's not just that central banks are plowing into gold, like Jason just showed, but you're seeing a bull steepener, and this is like the perfect monetary environment for precious metals and just commodities in general to perform very well. And this also leads to a weaker dollar, which, as we know, historically has fueled the greatest commodity booms of all time. So I think we are in the right environment for a broadening in participation, and it's been a lot of precious metals thus far, but I think it's going to expand to other things in 2026, like energy, you know, like corn, all the ag products like that. So this next chart, though, Spencer, gold was up every single month of 2025.
Wow.
This has never in history happened before. So, you know, people tell me this is unsustainable, this is too much. People are making way too much money, and they need to give it back to the market. And, you know, when I look at a chart like this, it just looks like a really strong primary uptrend to me. And I'm a trend follower, and I don't believe that trends just reverse overnight. I don't expect that to happen. This is all of the weight of the evidence continues to suggest that this is going to continue in 2026. So, you know, all of you momentum gurus out there, you know, I would think twice about that, because there are a lot of factors driving the secular uptrend in precious metals.
Yeah, Sam, I also like, well, there's a great comment here, which is the silver market some way broken, or is it just normal supply and demand, or is it a short squeeze? So you can speak to the short squeeze. I'll speak to the first part, which is if we're talking about like, so there's a bunch of people, and this is always in the gold and silver community. So let's answer this here, because I don't know if we've ever talked about it on any of our shows, but everybody talks about the silver manipulation. It's the end of the world. You can't buy silver because JP Morgan is driving the price down or something. The thing I always tell people, one, I don't pay attention to any of that shit. I think it's ridiculous and a waste of my time. But two, I think that if you have, like, there is manipulation in markets. Every trade is manipulation. I think JC says that all the time. Every trade is manipulation. But if you look at something like that and you go, okay, well, manipulation can't keep a market up or down. Like, think about the Hunt brothers back in the 1981, right near the top. Like, you can't boost a market that large up for long periods of time. You can't hold it down forever. So what usually happens is when these moves happen, they happen in a very big way. like, let's say there is some manipulation. I don't really believe that, but let's say there's a lot of manipulation. There's probably something out there. There's always something. But if there is that, then we kind of lifted the lid off of that, and then silver started to move in a big way. Gold's moving in a big way. Either way, like, what does it matter? Take the trade, stay long, make money. Sam, I want to ask you about, let's talk about the short interest in the gold miners, silver, and so on, and how crazy it's been.
Yeah, I totally should have brought those charts along, but yeah, Jason, if you look at something like GDX, that's the VanEck Gold Miners ETF, holds the biggest miners in the world, like Newmont is a very large weight there. And you can also look at the GDXJ, which is the VanEck Junior Gold Miners ETF, and it holds some of the most speculative precious metal stocks out there. Both of those ETFs have historically high short interest, and it's been historically high for pretty much this entire run in precious metals since March of 2024. So that is major. That's a very major tailwind for this bull market. And if you look at something like silver as well, the silver ETF SLV, I wish I brought this chart along. It's so good. The short interest has spiked on multiple occasions, and each time you see the short interest spike in that silver ETF, you've wanted to buy silver hand over fist because it's marked the bottom perfectly. Like, could not have been a better indicator. It's better than anything out there. So that's really fascinating to me how good this positioning data is, because it's not always perfect like that. I look at a lot.
Wait,
of
so
positioning data.
you're saying historically when short interest spiked, you wanted to buy?
Yeah,
but
take the other side
because it marked the bottom.
Yes, yeah.
Okay.
Like, I have the chart.
Okay.
It's like to the very penny, Spencer. It's fascinating.
Okay, so you're also saying it's spiking again now, right?
It spiked a few. I think that was like early November, maybe October. But that's like what got us through that $50 level and to new all-time highs. So we're still riding that unwind today.
Yeah, but you're not saying this is the bottom.
No, it's making new all-time highs. There's yeah, you need a downtrend for there to be a bottom. So yeah. So it's a different environment now. Right. Yeah.
Right.
But as the short interest moves up, if we're like, that's the thing I always think about with the COT reports. If I'm seeing more short interest as we're in an uptrend, I'm getting more bullish on it. That's kind of a way of sustaining a massive uptrend. So more, I think what you're saying, Sam, is that we could see this extend a little bit further here.
Absolutely. Yeah. In the short term, I don't know about that. We published a note for our Gold Rush Premium members yesterday, pointing out that silver was hitting our first Fibonacci extension level from that 2011 to 2020 drawdown. So I'm expecting silver to at least consolidate here. And Jason and I talk all the time about what the strongest primary uptrends look like. And the strongest primary trends, if you study them historically, they correct through time. They do not correct through price. So I think it'll be really fascinating to see how silver futures consolidate here, because I do fully expect a consolidation, but whether they correct by 15% or like retest that $50 level, or if they just turn straight sideways here and carve out some type of bullish continuation pattern, that will be very valuable information to see how strong this primary uptrend really is, and it'll also kind of dictate how fast we can get to this next extension level at $111.
I've said this before. Correction through time is harder on the psyche than the correction through price.
Look at the I think I brought along that gold chart. You just showed it. But like, that's exactly what we've seen this entire uptrend in gold. It's just consolidated straight sideways and then ripped higher. Like, look at that. It's 1, 2, 3, 4. And now we're resolving that fifth bullish continuation pattern. And momentum is not hitting oversold levels. I mean, this is just, it doesn't need to be complicated. This is what a strong uptrend looks like. So you want to continue to ride that primary uptrend higher until it gives you some type of indication that it's over. And right now it's doing the complete opposite, making new all-time highs.
And an interesting one is that you look at this these types of charts, and like, you'll get an understanding also that we're in a bullish period for precious metals. A lot of people don't remember. So I just talked about this on the morning show this week on Monday, which was Cebu Trade made a great back test for me, which was talking about the Santa rally. But what's the most bullish place to be in the Santa rally? Everybody talks about stocks. Yeah, stocks are doing great. They do well. I think it's up 75% of the time. But if you go to look at gold, for example, that's up 90% of the time over the last 25 years.
Isn't it kind of a dollar story, though, Jason? Like the dollar always gets the shit kicked out of it during this time. So, like, you want to buy the most dollar-sensitive things?
Yes, too, as well. But also at the same time, nothing has a seasonality like gold does. Even silver doesn't have quite the seasonality that gold does, or platinum or palladium. But gold is the most bullish place to be during that period of time. The dollar does get the shit kicked out of it. That probably will continue. I'd assume we see that into next year. I'm still saying the dollar's going to 90. Everybody has argued with me all year long, but it's like the structure of it doesn't tell me the dollar can get back up to 105. It's telling me that the structure is saying the dollar's going lower. So back to 90. Everybody's going to hate that. But at the same time, it's like that's going to be good for stocks. It's going to be good for a lot of dollar sensitive areas, cyclicals, and so on. So I think we have a lot further upside to move here in the market, especially the international stocks. I think those are going to be great next year. Totally. I think gold miners.
I wanted to ask you about the gold seasonality, Jason. Do you think that has anything to do with like countries around the world? Like take India, for example. They gift a lot of gold. You think that has something to do with the seasonality?
Absolutely. So if you look at, China does the same thing where a lot of people around the world, besides us in the United States, look at gold as a really nice gift to give people around the holidays. So they give people gold, family members, whatever, or buy more. So you see a lot of buying around those periods of time, whether it's Christmas, the Chinese New Year, and so on. So and Chinese New Year is especially the most important one. So now that we're in that period of time, we usually see gold start to move a lot higher here. Silver also has a great bid. I think silver was up like 10 years in a row at one point in January. So it has like, January seasonality for gold, silver, platinum, palladium, gold miners. Like that's where you want to be. There's probably a lot more money to be made in the short term. Like long term, yeah, I could say just like we all know, it's a little bit extended. It's going to pull back. Things are going to happen, sure. But over the short term, I think we have another leg higher here until we get to that consolidation point.
Nice. I'm here for it. Spencer, you want to throw up the next chart? This return chart, this bull market? I think this is really interesting.
It's just this is wild stuff.
Start with the precious metal futures. One more. Yeah. So far, this bull market, which started on March 4th of 2024, that's what I anchor to. That's when gold decisively broke out to new all-time highs and kicked off this secular uptrend. So far, since that date, you've seen silver rally almost 200%. You have platinum up about 150%, gold's up about 100%, and palladium's up about 80%. So historic returns. This is some of the biggest, like, what is that, 18 months? One of the best 18 months ever in precious metals. And also, based on this chart, I think there's a big catch-up move coming for gold and palladium. Jason and I spent a lot of time on Monday's video for Gold Rush members talking about that catch-up trade and its implications, because silver and platinum have just absolutely skyrocketed here recently. But if you look at something like gold and palladium, it looks like they have plenty of room to run to the upside and could see a significant move to get them closer to silver and platinum, because I don't think there's going to be this divergence for much longer.
Yeah, I think the interesting thing here is, Sam and I all year long, we're talking about, going back to the last year, everybody was like, oh, gold's moving up. That's great. But these other metals you guys keep talking about. So Sam had this great chart of platinum that he kept updating, this massive band squeeze in platinum, and going like, at some point this is going to move. And, everybody was like,
holy shit, did it move, Jason? Wow.
Holy shit, did it move? Yeah. Well, people were like, silver is not going to move. Central banks aren't buying silver. They're not buying platinum. They're not buying gold miners. Like the cycle always works in a specific way where people get very excited about gold. And then they go, well, shit, it's very expensive here. What should I do? Well, let me trade some of this gold out. I need to start buying different things inside of the precious metal sector. And then they start moving to silver, platinum, gold miners, palladium. I think also palladium's the one that probably the biggest catch-up move we're going to see. Palladium will probably continue to be a big runner here into next year and probably start to outperform all of these. I think that's going to be the one we're going to see next. I think platinum will probably get above silver at some point soon too. And the cycle will just run like that. We'll see platinum, palladium, the gold miners, the junior gold miners into the explorer stocks and the junkiest stocks you've ever heard of moving. And Sam, we've been picking a lot of junky stocks, and they've been working very well.
Totally,
we've made a lot of money.
$250 million mining stocks just keep turning into billion-dollar stocks. It's really nice just watching your little kids grow up like that, Jason. You know.
No, we made some good money.
Another return chart of this bull market, also anchoring to that March 4th of 2024 date. And as I just mentioned, silver is up about 200% so far this bull market, and you've seen pretty much all of these mining ETFs have outperformed even the best precious metals. So there has been alpha in the miners, and I expect that to continue. And I think it could really even accelerate because historically, you see more alpha than this from the miners. And if you look at something like the silver miners relative to silver, historically in strong precious metal bull markets, you see that ratio climbing. You see the miners dramatically outperform that underlying rock. And right now we're not seeing that. So, you know, based on the weight of the evidence, I believe that is coming. I think we're going to see a sustained period of dramatic outperformance from the miners relative to the rocks. But right now the rocks are they're going up so much that the miners can't keep up. But, you know, as these companies come out and report their earnings and blow the market's mind based on how much they're making right now with the rock prices so high, I think they will be rewarded very, very generously.
Yeah, I think there's so much money to be made still in the precious metals. And I think that's one thing. Like, one is Sam and I are going to come out here at some point and talk about the fact that this is ending when it's ending. We've been very good about giving our people targets, exactly where to get out, what exactly to do at certain levels. But also, we've been pretty steadfast on the fact that this is going to just continue. Commodities X gold, I think, is going to be the next thing. I think we're really looking at copper. Copper miners are going to lead probably into next year. I think that's a great place to start looking. I think Commodities X gold, you're talking about a lot of energy. So energy is going to be the thing that I really want to look out for this year. I haven't gotten too crazy bullish about it. I do think it's up next. I do think it's going to happen, but I haven't really said, hey, let's get crazy long energy just yet because we're not seeing it in the price. Oil is pretty depressed. It's kind of sitting near those lows. If we start to see oil moving, though, I think we're about to head into a really inflationary cycle. And I think that money is going to be made in the energy sector. Coal stocks, energy stocks are probably going to be one of the best trades of next year. But you just want to keep it on your radar and take the price signals when they happen. Don't front run it. But we're pretty close here. We're
already seeing some coal stocks work really well, Jason. Like the thermal coal names, like the energy coal names aren't working that well. But if you look at the names that are like used for steel production and all of these metallurgical coal names, they've been doing quite well. So, you know, it's kind of a bifurcated market out there in the coal space. And I appreciate that very much because, you know, I'm able to identify the names that are doing well and make money from those. I don't need to own the ones that aren't working. I can just ignore those and let them suck. That's not my problem.
Yes, and that's the best way to look at it because one, you got to buy like in this cycle, this is how you do it. You got to buy the strongest names right now. That's it. Like, don't go trying to buy bottom dip or find like something that I really like ExxonMobil. It does this, or COP that did well for me last cycle. Like, don't think like that. Look for the strongest names inside of these sectors. Buy them. Sam's finding some coal names. There's a couple energy names that are overseas, maybe one or two domestic. Canada has some really nice energy stocks. And continue to look at those and continue to take the trades in those as they come, but don't just front run the whole thing and be like, hey, I know that energy is going to start moving. So we continue to identify that, put out different trade ideas in those sectors at the moment. Because we're set up well to ride this commodity cycle into next year.
What's the next chart, Spencer?
Great question.
I think this is a good one. Yeah, this is Alfonso's chart. Shout out to Alfonso if you're out there listening to us. You are the man. This is a great chart. This is something Jason and I have been talking about for a long time now. You know, you had gold ring the dinner bell, and then you had the copper miners breakout, you had the steel miners breakout, and now you have the aluminum stocks on the cusp of a major base breakout. So this is just further confirmation that we are in the midst of a metals boom, and you're just going to continue to see these laggards catch up to the leaders, and that's exactly what happens in bull markets. You don't see the leaders catch down to the laggards.
Yes, and so I want to answer this one question too. And two, yes, I agree. This is exactly with Sam. This is the way you want to play this and continue to buy these trends. We've been highlighting a bunch of them. So somebody said, I keep hearing about the structural supply deficit. How bad is the deficit, and why was it allowed to get this bad? So there's some answers there, but at the same time, it's like, why do we care exactly? You know, there's another thing. It's like, are we trading trends? Are we traders? Are we just taking advantage of trends? Like, if we're doing that, we're going to catch these big moves. We don't have to know the supply deficit. I pay attention to that stuff. I think, it's definitely interesting. There's definitely not enough supply out there for silver. There's not enough supply out there for copper. We could go down the list, but that's how the cycle works. The supply doesn't really matter until the price starts to pop anyways. And then
these fundamentals just like, aren't they just like fun to talk about at a cocktail party?
Yeah, it sounds really nice.
I sound intelligent. You what supply and demand is, and right now it's telling you that there's either more demand than supply, or there's just like a structural supply shortage. Either way, I don't really care. It's the market's telling you it's going up, so just shut up and listen to the market, right?
And I broke it all down, one time about the supply deficit and what exactly was happening. But at the same time, at the end of it, I just said it doesn't matter. You buy a new high and then it keeps running. You buy a breakout and it keeps running. Like, who cares about what's going on under the surface? But it's going to just help your trade continue to move. And we're still in that. That's the other thing about it. We're still in that supply deficit. There's a lot of people trying to take physical orders from the LME right now. They're not able to do it. So if they're not able to fulfill that, what do? Well, they buy silver from other areas. They keep buying it from different mines and so on, which keeps the price moving higher. So there's some reason there. But at the same time, it's like, as long as the trend is up, we're in it. When the trend changes, we're going to be out of it.
I wanted to bring out this copper chart. Where is it? There it is.
Yeah. I mean, look at this. Does this look like a massive top to you, or does this look like a massive multi-year accumulation pattern that's on the cusp of resolving higher? I think it's the latter. And, based on historical base breakouts in copper futures, you don't just see it go up at 20%. You see it double in a year. Like, historically, that happens almost every single time. So, Jason and I remember we were on a live stream. Man, was that like early 2024? I don't remember when this was, with Mr. Kevin Green. We're talking about $10 copper, and I put it out there, like, the charts look like they could go to $10, and then you had that breakout earlier this year, and then of course, Trump has to come out here and slap some tariffs on the copper futures, and they just got absolutely crushed. I think it was down like over 20%, I believe, in a single day, like the worst day ever in copper futures because of this Trump tariff situation. But you have reversed that, and you are back at the scene of the crime, and I think it's time for copper. And I just showed you that copper miners chart. The copper miners certainly have been doing very well, and they have been leading the way higher. And I think copper futures themselves are about to catch up in a significant way. This could be the best trade of 2026. It wouldn't surprise me at all.
What about oil, guys? I mean, that's the $1 million question here. So far all we've done is talk about things that have gone up, right? Energy hasn't played ball. So when moon?
It's really it's a frustrating one, because it's like I feel like it's not frustrating for me. I think it's frustrating for other traders. I just look at the cycles and go, this is the general direction of the cycle. Do we take buy signals in things that are not moving? No. But I know the general direction should be energy at some point. And the thing is, like, if you look at it historically, and just as simple as this, if I go all the way back, there's been plenty of times where energy's been last. It's last every single time, basically, except for, I think maybe that was the 2000s. So almost every single time it's been last, gold, copper. But also, now we're looking at all of these commodity-based sectors moving. We're looking at lithium miners moving. We're looking at coal stocks are starting to move in certain areas of coal. We're looking at solars moving. We're looking at silver miners. Then we're looking at steel stocks. We're looking at palladium and platinum miners. I could go on and on. Aluminum stocks. So we're basically seeing all of these industrial metal stocks moving like crazy.
It's pretty much like only energy that sucks out there,
yes,
right?
It's
like
only
you have the ag products, but if you look at something like wheat overlaid with energy, it's pretty much the same trade. So that's not really a surprise. But wouldn't you expect those laggards to catch up to the leaders?
At some point, we're in a bull market. That's how it works. So at some point, this will catch up. I just think it's hey, we have so much suppression out there. We have Donald Trump coming out here every day saying, drill, baby, drill. I want gasoline under $2. And everybody goes, yep, he really does. He means it. So it's got to go down. And then if you look at what he's actually doing, you're like, okay, we're talking about stimulus checks. We're talking about 50-year mortgage rates now. We're talking about all of these things that are very inflationary, not to mention the fact that he's like, hey, Fed guys, you guys are going to get fired if you don't do what I tell you to do. So we need more. We need more inflation out there. The guy's trying to run it hot. He's trying to run it fucking hot. And if he's trying to run it hot, there's some point where we're going to see energy just rip. So it's more of the fact here. I'm saying keep it on your radar, guys. Just keep it on your radar. Don't go nuts. Don't go start buying oil futures today. Wait for the move, but it's probably going to happen.
Totally. And I brought this chart along. I'm not like Mr. Trendline guy or anything. I love myself a good horizontal trend line, but just looking at a long-term chart of crude oil, I couldn't help myself. I had to draw the diagonal trend line, and it's just too good. It's a textbook polarity trend line. This trend line was resistance for many, many years. And then when you broke out in 2020 and came back and retested it, it has served as support so far. So crude oil is flirting with new multi-year lows, but when you look at it like this, it's just kind of turning former resistance into support. And I look at a lot of momentum readings, and the downside momentum is just not there in crude oil. This is just a lazy downtrend, and I think that makes it very vulnerable to an upside move and a squeeze. And Jason follows the positioning very closely in the crude oil market, and you're seeing very, very offside positioning there. Almost, I think it's historic, Jason, right? Most pessimistic speculator positioning ever.
And the lowest volatility ever. So we're talking about basically a scenario here for some big moves to the upside or downside. But I will also say downside wise, it's energy stocks are holding up so well. Also, if we're looking at just a general rule of thumb as a trader, as Sam's talking about here, this downtrend is not very strong. The volatility is very low. What do they always say? Never short a dull market. This is the dullest market that there is out there right now, maybe besides bonds, but that's all the same trade. So I think it's important to do a couple things. One is wait for it. Don't just jump into it. Don't just jump an entry and go, hey, I need to do this. Oil's going to move up. So be patient here. And then two is I really like that $77 level for oil. Yes, it's up there quite a bit for most people, and they're like, I don't want to wait for that. Really wait for it. Because when that happens, you're going to get a big move. Energy stock.
We're going to see oil go to $200, Jason. Why do you need to fuss and fight over these 20 points here?
Exactly. I do think the next big move is probably headed towards the 150s at the least. So don't front run it. Wait for this thing to break out. That's a 52-week high, I think, is at 77.50. So once you get to that zone, same with XLE, got cut in half recently. So the XLE line is 50.50, so $50.50. I would buy either one of them, and I wouldn't think about the other one at the time. I would just go, okay, when oil gets over that level, I'm going to buy the shit out of it. When energy stocks get above that level, I'm going to buy the shit out of it. That's it. Keep it simple.
That's what I love about you, Jason. You keep it so simple.
Guys,
I brought
last
the
one
chart
here.
along
Simple
because it's
man.
on my naughty list. This chart looks terrible. If you look at the nuclear stocks, they've been humongous winners in this bull market. But man, they've just really lost that over the past few months, and they look vulnerable to further downside in 2026. So this is my naughty list, and the base and industrial metals are on my nice list for 2026. Those are my final answers. What about you, Jason? What is your naughty and nice list for 2026?
Naughty list, huh? Nice list is obviously the precious metals. Come on, like there's nobody better. There's nobody who deserves more gifts from me this year. So definitely the precious metals. Naughty list, I'd probably just go energy. Just basically across the board. It's been an asshole. Let's be honest. It's been hard to deal with. A lot of people don't want to fuck with it anymore. I totally get it. However, like, you have to think about it this way. I always talk about the best trades that I've ever put on. And most of them, and what I learned from that is that most of them have the same type of scenario where I honestly hate the trade. I don't want to take the trade. I want nothing to do with the trade. And then, like, my signals keep saying, hey, keep buying this thing. And I'm like, I bought it 3 times. It's basically kicked me in the nuts 3 times.
Right?
Yep. Cocoa futures did it for almost a whole decade. So, like, you look at those, and then cocoa, next thing you buy, boom, you get this huge move, 500% very quickly in a leverage product, which means you could be making, something like 2,000% on it very easily. It's the same thing for energy. So I do think it's one where just keep taking those trades. The next breakout could be the one. And maybe it stops you out again. Risk manage properly. 1% of your overall portfolio. Who gives a shit? Because at the end of the day, that final move in energy could be something like, another 100% move, another 200% move, whatever it is. That's what we want to do, and that's why we keep taking the signals.
We've had a great shout out to everybody that showed up for this.
Yeah, like I said, this has become I guess a tradition now. We did this for Thanksgiving. Now it's Christmas. I suppose we'll do it maybe on New Year's. I don't know when we'll do this next, but I guess the next major holiday. I do want to mention, as my voice starts to go, if you want to get these guys' trades, join the Gold Rush. The link is in the chat. It's in the description. It's on the screen right there. You just scroll down, and you'll get all these guys' research and the trades as they put them on with their targets, upside, downside, entries, exits, the whole thing. All the research is there in the Gold Rush. A lot of the things they discussed today, they have been discussing with members for months already, right?
You can go back to the archive. We've nailed this cycle, so we have a lot of very happy members, Spencer.
So go do that. Thank you everyone for stopping by. Merry Christmas, Sam, Jason, everyone in the chat. We appreciate you guys hanging out, and we'll see you guys tomorrow. Enjoy the rest of your day. I don't know. I don't have any final thoughts. That's
Merry Christmas, everybody.
Yeah, Merry Christmas, guys. Have a good day.
Bye. How do I end this stream?
Do it, Spencer.
What should I do? This one?
Hit
this one? Which one should I use? This one?
One of them will work.